Let's get into some key charts for the week, particularly with quite a bit of data out, perhaps later in the week. To Peter McGuire joining us from XM. Pete, a very good Monday morning to you. Great to catch up with you as usual. Let's first take a look at the broader equity markets at the moment, see how we're tracking. What are you seeing there? Sort of investors treading water a little at the moment, do you think?
Well, good morning, Andrew. Yeah, happy Monday. I'll tell you what, if you're in Japan, you're at 34-year high, so it's been an extraordinary start to the year. US equities, that fear of missing out rally seems to have continued. The Aussies a little bit sideways, but there could be a little bit of an uplift. I wouldn't be surprised by, between now and the end of the month. And the Chinese situation seems to be slowly grinding lower. So that's a little bit of a wrap, I suppose, and that makes up a fair bit of the world.
Well, Pete, let's get into some of the data we are expecting this week. Key focus here in Australia will be employment. What are the expectations?
Well, Andrew, if it stays at that 3.9, if it's better than expected, then that's going to, I think, have a decision that really, where does the RBA sit on this? If the unemployment number does edge up, and that's what everyone's possibly thinking, then naturally that would push investors as far as bets and expectations of rate cuts for this year. And we also need to keep an eye on Chinese optimism as we play deeply into that. So that's where we're sitting at the moment.
You mentioned China there. We'll get a read on growth out of China this week as well.
Absolutely, yeah. The numbers coming out of there will be interesting as far as Q4 GDP. We're tipping around about year on year, Andrew, at about 5%. So that'd be at expectation, and that fourth quarter around about 5.3%. So when it's annualised, you're looking at just on 5. It might shoot to the upside. We've just got to see. But if you look at the CSI 300, as far as equity markets, it's been down the best part of 1,000 points from 4,200 to 3,200 from this time last year.
Now, elsewhere, Pete, in the UK, what have we got there just in terms of CPI? Look, I guess this is what we're watching, of course, globally at the moment, where inflation is tracking, which is looking positive, certainly in the States, to a lesser degree here, I guess. What are we seeing in the UK at the moment?
Well, you're looking at around about a 3.9. That's what we've got tipped, Andrew, for UK this week, and that'll be pretty much unchanged. That's the December number coming in. November showed that, so we're not expecting any change. We've just got to see how it plays. You've got core CPI also to be watched, and that remains above 5%. And the UK jobs and wage numbers are due for November. So, there's a little bit of data coming out of the POMs, and we've just got to see the impact naturally that has to pound versus euro and pound versus yen and dollar.
All right, let's take a look at the pound. What you're seeing there at the moment, we can get that chart up. We'll actually go through a few of the currencies here, beginning with the pound.
Yeah, 1.2753. I mean, the chart, Andrew, it seems to be a little bit of it's certainly a nice move to the upside. And if you just follow that, it's above those three indicators and or two of them. And that just shows us, is 130 the new handle that it's heading towards? Everyone's saying that it's possibly got that uplift that you might see, a 130, 1.30, that is. So, don't get in the way of it. It seems to be consistent and pushing up further. So, yeah, I think it's pretty hard to be bearish at the moment. We've just got to see how it rolls over the next couple of days.
All right. Take us through the Aussie, what you're seeing there at the moment.
Ooh. Tell you what, it's I see volatility. I see that sell-off, and everyone was tipping that it could be a 70 handle by maybe Australia Day, but the winds come out of it, and you're looking at that mid-66 sort of number. So it seems to have a little bit more of a downdraft, and we're waiting for those numbers to come out this week as far as unemployment and we naturally, that US dollar seems to be a fairly choppy market at the moment with rate expectation cuts and sitting at around about 102.50, and we're sitting at the best part of 66.85.
With expectations of what we're going to see through the course of the year, do you think, Pete?
Well, Andrew, I wouldn't be surprised to see it up from here. Everyone's saying that there's got the best chance of being a plus 70 handle this year. So that seems to be the general consensus. We've just got to see how it plays. And, we've got the big elephants in the room as far as rate cuts. Is the Fed moving forward with this in March or April? The impact that's going to have across the commodity complex is going to be vast. So, yeah, we're at the beck and call as far as central banks. We're looking as world trade and naturally, Chinese consumption when we sit here in this lovely land of Oz.
Pete, Japan. Talk us through what you're seeing with the yen, because a lot of expectations that this year we are actually going to see a move from the Bank of Japan.
Well, exactly, Andrew. I mean, the best part of 144.80, if you're looking as far as the Nikkei, it's been extraordinary this year, or extraordinary over the last year. CPI projected to have eased to around about from 2.5 to 2.3% year on year in December. And that is I suppose, the concern with Japanese inflation to reaccelerate over the next few months. As long as it holds above 2%, then there's every chance the BOJ will call time out on the negative interest rate philosophy, and you'll probably see a move to the upside. I'm saying that could happen by possibly April or May.
Pete, let's round it out with what we're seeing in Bitcoin. Of course, a lot of movement last week. This all on that move by the Securities and Exchange Commission, which was a bit of a false start, wasn't it? Because we had that erroneous tweet, and then the following day did actually confirm and has approved the spot Bitcoin ETFs in the States. Was this a matter of sort of buying the rumour, selling the fact?
Well, a little bit, Andrew. I mean, it was at 46 and now it's at 42, so it's been sold off and possibly that hot air's come out of it. But the overall theme, I think, is going to be stronger for longer. And you've only got to put your mind back to where we were this time last year at the best part of 16,000. Now you've nearly hit 46. So it's been extraordinary. And it's pretty hard to deny that there's been a very solid engagement across, global investors looking at Bitcoin. So with the SEC coming to the party, then I think it's going to be gloves off, and it could be a very fascinating how 24 plays into the crypto market and certainly Bitcoin.